Hello everyone, I want to talk about the one stock that I just invested more than $11,000 in the past month. I also want to talk about a very popular ETF that I just bought and why I bought this one in particular. The results may surprise you. And I want to talk about this one beloved Canadian stock that's at its all-time lows and why I'm absolutely avoiding it. Now, just in case you don't know me, my name is Tracy. I left my engineering job at 35 years old, and now I manage a multi-million-dollar investment portfolio in my spare time. Now, I'm not a financial advisor, but I'm someone that talks the talk and walks the walk. Now, the first stock I want to talk about is Microsoft. That's where I spent more than $11,000 in the past month. Even though it's near all-time highs and it's grown more than 200% in the past 5 years, I believe that it still has ample room for growth. Now, my motto is buy a company that you know, buy a company that grows, and buy a company that makes a lot of dough. So when I look at its financials, well, its revenue, its cash flow, its earnings are all trending up and projected to go up over the next 3 to 5 years. And it's expected to grow double digits over the next 3 to 5 years. But can I expect it to grow as much as it has in the past 5 years, which could be up for debate? Depends on what you think Microsoft can actually do. And I'll share my thesis. Now, I believe there is some amazing growth catalysts upcoming from Microsoft. Now, just in case you didn't know, Microsoft owns 49% of OpenAI, which is ChatGPT, which is the fastest growing app in the past year. And did you know what's supporting OpenAI's backend? It is Microsoft Azure, which is its cloud platform. And this is the fastest growing area for Microsoft. And this is huge because ChatGPT has more than 100 million users around the world. And according to Grandview Research, more than $45 billion was spent on artificial intelligence in 2022. And it's expected to grow more than 35% year over year over the foreseeable future, which is huge. Now, the one thing that stands out about Microsoft is that it has a diversified sources of revenue. Out of the $211 billion that it pulled in last year, there is not one or two that's completely dominating the sources of revenue. In fact, they're pretty spread out. Unlike Apple or Google, where it has concentrated revenue, Microsoft has multiple eggs in multiple baskets, which makes it recession-proof in my humble opinion. But of course, given Microsoft's massive rise in the past year, it doesn't mean that the stock price is a good price to buy right now. I actually think, given its price per earnings, which is like saying how expensive or cheap it is relative to how much income it's earning, it's actually in the average, okay, if you look at the past 10 years. And for me, if Microsoft drops in the foreseeable future, which could happen, you never know in the short term, then I'll be gobbling up more Microsoft shares. I just want to do a brief pause here. If you've been watching my videos and you love my content, I would really, really appreciate it if you hit the subscribe button and that bell notification button to get the latest and greatest videos coming to you every single week. Plus, it's free. So let's get back with the video. Now, the next stock I bought represents 500 of the largest companies in the United States by market value in the stock market. Now, I decided to buy this in my kids' RESP fund. Now, if you're looking to invest in the S&P 500, there are two very popular ETFs. One is VOO and the other one is VFV. Now, the biggest differences between VOO and VFV is that VOO is traded in the New York Stock Exchange and it's American dollars, versus VFV is traded in the Toronto Stock Exchange and in Canadian dollars. Now, surprisingly enough, if you went back in time and compared the performance between VFV and VOO, this is super, super crazy. I would have thought that VOO would have outperformed VFV, the Canadian equivalent. But in reality, VFV has actually outperformed VOO since inception. Now, you're probably wondering, well,
wouldn't I just invest in VFV because it's outperformed VOO?
That's a great question. It seems like a no-brainer to invest in VFV. there are a lot of things you gotta consider. Number one is VFV has higher management fees. Number two, then there's withholding tax on the dividends. Unfortunately, as Canadians, we have to pay 15% withholding tax on all foreign dividends that you collect. And because VFV actually just holds VOO, it is subject to the 15% withholding tax. And unfortunately, there's not much you can do about it. Now, for the most optimal setup, just buy VOO in your RSP so that you don't have to pay the 15% withholding tax, and own VFV in all your other accounts. Now, the Canadian stock that I absolutely would avoid is the company called Weed. This is a beloved Canadian company that's trading all-time lows. But here's my reasons why I would absolutely avoid this company. First one is not profitable. Even though it's been growing its revenue over the past few years and making money, but it has too many expenses, so it is not profitable. And it's not projected to be profitable until 2026. So even though it's projected to grow its revenue over the next several years, it's still not going to be profitable. Number two, there has been a ton of insider selling, which isn't a good sign. Now you're probably wondering,
Is this company going to go bankrupt?
great question. The good news is that it's been able to sell its properties. The last one was in Smith Falls to raise cash to pay off its debt. In fact, it's reduced its debt by $437 million. And a quick rule that I like to use is to make sure that its debt is no more than 2 times the amount of cash it has. That's like saying that it has enough cash that it can pay off its debt in just a bit over 2 years, if it really had to. So based on its financials, I don't think it will go bankrupt. I'm still not going to buy the stock. I'm not saying that Weed is a terrible company or that I don't think the stock price will actually do well over the foreseeable future. It's just that the probability of it doing super well in the long term is like not that great. Now, if you want to learn how to make $1,000 in passive income every single month, you definitely want to watch this video up here. Anyways, I hope to see you in the next video.